What's up, YouTube? Welcome back to another video. Okay, now this is going to be a very simple but very important video. One thing I feel like is not talked about a lot when a trader comes into the market, when a new trader begins trading the Forex market or just regular market in general, right? Risk to reward. It's very important to talk about risk to reward because one things that we learned once we came into the market, once we started trading Forex, whatever case may be, is okay, how much pips can you get? How much pips can I get today? Let's go for 50 pips today. Let's go for 100 pips today, right? So yes, pips is important to look at, but it's not as important as risk to reward. And me personally, I don't even care about pips anymore. Pips doesn't even cross my mind. The first thing I look at is the risk to reward. How much am I risking to gain? How much am I getting back depending on how much I'm risking, right? So that is the most important thing that you want to look at when you're trading the Forex market, okay? Because you don't want to get into a trade if you're not getting the substantial amount. If you're not getting a substantial amount for your risk, there's no point. Me personally, for a trade, I like to target at least a 1 to 10. So that means I'm risking, let's say for that 1 to 10, I'm risking, let's say I'm risking $500. I expect to make back at least 10 times that. All right. You see what I'm saying? So that risk to reward is important. Now, it doesn't matter the pip count because 1 to 10 could fluctuate. What else could go into your risk to reward is your stop loss, and this is why we try to keep our stop loss under 10 pips, because when you have those small stop losses that's under 10 pips, your risk to reward shoots higher. You get more profit for your trade. So before I get into that, if you guys want to join the Discord, link in the description. If you want a one-on-one session, link is in the description. I do one-on-one sessions for my students, or I do it for regular people that just want a one-on-one session, right? But there is a small fee to that as well. But for my students, they're free. So if you're interested in that, you can contact me at Instagram, right? I have an Instagram. You can contact me at Telegram. I have a free Telegram chat where you can go in. Sometimes I send charts in there, my setups, what I'm looking at for the people that's in there. All right, so let's talk about this, right? Let's say you have a $100,000 account. Okay, and this is why RR is very important. Okay, 1% risk on that $100,000 account is $1,000. Okay, that's $1,000 for 1% risk. So let's say I am I'm taking a trade and I am trying to risk 1%, which means I'm risking $1,000, right, to make $10,000. This is a 1 to 10 trade, meaning if this trade hits TP, I get $10,000 in return, right? If it hits stop loss, I lose $1,000. All right, that's a 1 to 10 trade. Now, a 1 to 20 would be I risk $1,000, but I'm gaining $20,000. 1 to 30, I risk $1,000, I'm gaining $30,000. So you see, what's changing is not your risk, but what's changing is your reward. So as long as you keep your risk consistent, your reward, it can fluctuate. Now, how do you get that 1 to 20, 1 to 30? That depends on your stop loss. Is your entry tight enough? Is your entry precise enough to where your stop loss could be very precise? Once your stop loss is very precise, that's when you can get those big RR trades. I'm gonna show you an example. It depends on how your stop loss is. Okay, it depends on where your stop loss at and how you can fluctuate that to get those big RR trades. Now your risk is staying the same, but now let's say you're taking a trade and you have a huge stop loss. If you have a huge stop loss and you're risking $1,000 again, let me show you an example. If you're risking $1,000, but you're only gaining, let's say you're only gaining 2% or 3%, you're only making like $3,000 back on that. Okay, you see what I'm saying? The risk to reward is not the same, and that could be on one trade. That could be on the same trade that you took with this. I'm gonna show you a good example of that, where I'm gonna show you the same trade but with different stop losses. You're gonna see how the RR is completely different. Okay, you're gonna see how the R is completely different. Let's say I'm taking a trade and I'm risking 1 to 10. Right, I'm risking 1 to 10 on each trade I take. I want to gain 10%. I'm risking 1% of my account on a $100,000 account. Let's say I lose 5 trades in a row. 5 trades in a row, I just lost $5,000. Okay, I lost $5,000. Boom. What does it take for me to get back to break even? All I need is a 1 to 5 trade, which is gonna risk another $1,000, but I'm gaining 5%. Okay, but we don't target 1 to 5. Okay, we target 1 to 10. That's our minimum target. So let's say we take another trade and excuse me for a minute. We take another trade and this trade hits TP, right? We just gained $10,000. Now we have $5,000 in profit. Okay, just off of one trade. We lost 5 trades, but just one trade put us back way in profit, $5,000 in profit. So you see what I mean, how the RR, because I see people that, you know, only take 1 to 1 or 1 to 2s. Those are not going to be sustainable, because boom, if I lose 5 trades in a row and I'm only taking 1 to 1s and 1 to 2s, one trade is not going to get me back to break even. I'm gonna have to take multiple trades. Okay, so that's why I like to trade with this precise RR. Okay, now yes, my minimum target is 1 to 10. But, you know, you can get 1 to 20s, 1 to 50s. That's when you're talking serious, right? That's when you get those serious trades and those serious precise entries, okay? Those happen. Those type of trades happen, all right? The way that you catch those type of trades is how well can you be precise with your entry, all right? How well can you read the market to know a specific area that the market is going to stop at, okay? That's the key. All right, this is sponsor candle, okay? So this is the first trade idea that you can take from here. The first trade idea is you can take a short from this sponsor candle with your stop loss right here, right? So you have an 18 pip stop loss, all right? And your RR, let's say you was targeting, you know what? Let's say you rode it all the way to this low, all right? The max that you got here is 1 to 4. A 1 to 4, that is the max that you have gained here. A 1 to 4. Remember we explained, let's say we have $100,000. Okay, let's say we have $100,000 account. We're gonna stay with that same scenario. Let's say our account is $100,000. You just gained $4,000 and you risk $1,000. So you just risk $1,000 to gain $4,000. Okay, that's the first trade. Now remember that our first trade was a 1 to 4. Let me see if I can write this down somewhere so we can have a look back at it. So our first trade was a 1 to 4. With an 18 pip stop loss. All right, a 1 to 4 with an 18 pip stop loss. Cool. Now let's look at our next possible trade opportunity. All right. Well, your next opportunity, your next trade is this manipulation. So this up to down move right here, this is your next sponsor candle, right? That's your next sponsor candle. And what you could have done here, right? You know, a simple setup would be breaker structure. You have a breaker structure right here. We mitigated a 2-hour candle. We have a breaker structure. So essentially, this right here is your next sponsor candle. So I don't want to kind of go on a higher time frame to show you, but understand that this whole thing right here is a sponsor candle, like this is. Okay, you see, when I went on a 2-hour, you can see this as a whole sponsor candle. Just understand this move towards the upside with this down move is a sponsor candle. All right, so let's say we took 50% of this. So you wanted to take 50% of this entire move and you wanted to take that sell, okay? Now, let's say you put it right here, right on top of this, you know, right by the body. You have almost a 12 pip stop loss. With a 12 pip stop loss, you gained a 1 to 5, which is not much. As you can see, it's not much. So our next trade was a 1 to 5, okay? 1 to 5. So you see how the stop loss, and it was 12 pips. It's 12 pips. That's 6 pips less. All right. You see how much the stop loss really determines what your RR is. All right. Boom. Let's say you wanted to get a little bit deeper. Now let's say you wanted to even go lower time frame, and let's say you wanted to look inside of this zone right here. So essentially, you wanted to take a trade inside of here. Well, let's zoom in. Go to the 1 minute, right? This is where you're getting juicy. This is where you're getting those sniper entries. This is where we understand how to trade the market. This is where we get those precise entries, okay? Because first of all, let me walk you through this trade real quick. Understand that this is a redistribution, which means it's a supply zone, okay? This right here, this quote unquote mitigation that happened This is Asian session. We don't trade Asian session. Well, me and my team, me and my students, we don't trade Asian session. We know that because we know Asian session will get manipulated like it did right here. So once this manipulation happens of Asian and then we get a break of structure, we understand that depending on the size of this manipulation, right? Since this manipulation is a big candle, we know that we're not going to trade this candle alone, okay? Because the stop loss is so big, the RR is not worth it. So what are we going to do? We're going to zone it out like I did here. Let me kind of move it out. We're going to zone out this manipulation like I just did, and we're going to go inside of it, and we're going to look for that lower time frame confirmation. Well, what's going to give us that lower time frame confirmation? It's the same thing. So essentially what we see is the market is driving towards the upside, boom, look at this, to the downside, break of structure. That shows us signs of weakness on lower time frames. Since we're on the 1 minute time frame, that's showing us signs of weakness. So now what do we look for? Now, instead of taking this entire zone, we're looking at the smallest entry. So what is our most recent, sponsor candle? It's this right here. Boom. So now this is our entry. And now our stop loss is above here. Now we have like a 3 pip stop loss. A 3 pip stop loss. Look at the RR. This is a 1 to 19. Okay, same trade, same area, just different entry, different stop loss. Now on a 3 pip stop loss, we have, if I can find the let me see if I can find it real quick. What I just drew. There we go. Now we're still risking the same thing, which is $1,000. The only difference is the stop loss is 3 pips. Now I know with those small stop losses, people can get scared and they're like, well, what if the market you have to be confident enough to know what the market is doing. Okay, you have to be confident enough to understand where you are in the market. And you see how I broke this down to understand why we were able to take this trade here and we didn't have to worry about taking the 50% of this or taking this huge stop loss here. So we're not taking these big stop losses here. All right, we're taking the smallest entries, and this is why me and my students, we look for confirmation entries, because it gives us the best entries, it gives us the best RR. Now, so instead of us, settling for 1 to 5, we caught the exact same move as somebody else, but somebody else, they only made 5% off of it. Now, don't get me wrong, if 5% is good enough for you, then don't worry about anything that I'm saying, okay? If 5%, if you're okay with 5% and that's part of your strategy, or 1 to 4, or whatever the case may be, and that works for you, then continue that and keep going like that. That's your profitability. Go with that, right? I'm talking to the people that wants to learn how to get, better RR or trying to maximize their RR to the fullest. Okay, so this is how you do it. You want to use these supply and demand zones. You want to use these sponsor candles, these manipulation zones, zone them out. Go on lower time frame, 1 minute, 2 minute, 3 minute, and look for a sign of weakness. All right, look for the market to show you that it wants to buy, or if it was that it wants to sell, or if it was a buy opportunity that it wants to buy from here. Right here, we've seen that the market showed us this impulsive move, and we left the sponsor candle right here. Once I go on one minute time frame, you'll see it, and we broke structure on lower time frame as we are inside this manipulation zone. So that tells me that the market is showing me opportunity to sell. Okay, and now that's why I'm confident to take this. Now let's say this hits stop loss. Say it hits stop loss, and we got one more drive to the upside. Now I just lost $1,000, so I lost 1%. Boom. Now let's say the market goes down. Now it goes down and we break structure. Well, guess what? I'm gonna take this trade to continue down, because I know that if I take this next entry and it goes and it gives me that run to the downside, I'm gonna make this back plus way more. Remember, a 1 to 19, that's I'm risking $1,000 to make $19,000 on this one trade on a $100,000 account. So you see where I'm kind of going with this, okay? So that's one thing that I want to kind of explain, because I know a lot of people don't talk about it a lot, and hopefully it helps somebody out. Maybe, the new traders will, get some knowledge from this and understand how they can do this more. All right. I do talk about this more in the mentorship. I do talk about this more with my students in my Discord. So if you want to join that, if you want to be a part of that, link in the description. If you want to talk to me more, just other things, And if you want to just get some more information from me, you can talk to me personally on Instagram. Okay, so let me know what type of videos you guys want to see, and I'll see you guys in the next video. Peace out.